इथे पण मोरमध्ये ऑडिओ रेकॉर्डिंग नाही रेकॉर्डिंग all of you can see the screen. Can you hear my voice?
Yes, sir.
Okay. And
Yes, sir.
everybody can see the screen. I mean, the is Baker content visible for everyone?
Yes, sir.
So we'll wait for another 5 minutes, then we will start. I think we can start now. Hope everybody is joining. Okay, so can you introduce today first, and can you open your camera? Yes, anyone can start.
Yeah, hello everyone. So myself is Ujali Pariyar and I'm basically from Ahmedabad. Thank you.
Yes. Okay, Indu, can you introduce yourself?
Yes. Yes, sir. Myself, Sindhu, and I'm from Bhilai, Baitur, and I'm a railway employee also. Thank you.
Okay, then Ritika.
Hello, my name is Tika. I'm currently a student at SME and glad to attend this class.
Okay, Hardik.
Good evening, everybody. Am I audible?
Yes.
Yes. So, hello, everyone. Myself, Hardik Agarwal, and I have completed my graduation, and I am residing in Bangalore itself, and I am very excited for the classes. Thank you.
Then, so read AI meeting notes RN. Yeah. So I don't know the name. Okay, so RN means read AI meeting notes. I'm able to see here. Can you introduce yourself? Avantika.
My name is Avantika and I'm from Bihar.
Okay, Harsh.
Yeah, good evening, sir. Myself Harsh Kawas, and basically I'm from Goa, but I'm working in Bangalore. Looking forward for this class.
Yeah. Meghna.
Hello, sir. I'm Meghna. I completed my undergraduation and I'm looking forward for the classes. I'm from Andhra Pradesh. Thank you.
Ruby. Okay, then like Ganam
Good
Bigai.
evening, sir.
Yeah, Ruby.
Yes, sir. I have a facial injury, sir, so I can't able to attend, turn on the video, sir.
Okay, no problem.
I have completed in postgraduate MCOM. I am in Velu, Tamil Nadu.
Okay, yeah. Ruby, can you introduce yourself? Khushi?
Good evening, sir. I'm Kushi. I'm currently pursuing PGDM at ISME. I'm from Karnataka.
Okay. Aditya?
Good evening, everyone. Good evening, sir. My name is Aditya. I'm from Bangalore. I've just finished my graduation from Jain University and I've got placed in Deloitte. And yeah, I'm excited to meet everyone and learn a lot from them. Thank you.
Yeah. Akash? Akash? Sorry, Aman? Aman, we are not able to hear you. Your mic is off, Aman.
Sorry, sir. Good evening. Good evening, everyone. I'm Aman from Bhavani Mandi, Rajasthan, and I completed my bachelor's from Kota University.
Okay. Aditya?
Hello.
Yes, Aditya.
Hello, sir. I'm Aditya. I'm from Hyderabad.
Yeah. Okay. Vaishnavi?
Good evening, sir. I'm Vaishnavi, and I'm from Bangalore.
Okay. Okay. So, yeah. Okay. So, I think we finished the introduction. Okay. So, myself, Sumit Tawri. I am basically from Pune. Okay. So, I did my CA in 2004 and then I am qualified US CPA, US CMA, UK CGMA and CSCA US and recently completed postgraduate diploma from Oakla University. Um, so it is a PGP program. Okay, so it is kind of management degree. Okay, so I'm associated with ISME since last 2 years, and I'm mainly taking a bar and the reg actually. Okay, so we start today with the bar. Okay, so bar is basically the advanced accounting and plus some aspect of economics and like enterprise risk management or something like that. Okay, so that you will see one by one. Okay, so today we start with the first module. So it is basically, you can see here, risk management framework. Okay, so this is all related to the risk management and economic analysis. Okay, so now what is basically the risk? Okay, so you need to involved in all conversations. Okay, so means you may heard the word risk and how you can correlate the risk in a business basically. So can you tell me what would be the risk? I mean, someone is working in a consulting firm, someone is in software industry or manufacturing industry. They always find some risk. Means whenever you are taking an action, we may succeed or we may get failure. So the reason for failure would be the risk actually. Okay, so can you give an example of risk in a business activity? If I consider
Market risk.
market risk, yeah. What is market risk? Compliance risk, yes.
Pricing strategies.
Risk, yeah.
Investment risk.
Investment risk, correct. Okay.
Uncertainties in
Uncertainty is itself a risk always. So, yeah. Okay. Market risk means if we consider a potential for a market, say for 1 million euro, but actually the market is for say for 0.25 million euro. So that is basically the market risk. Okay, how it will impact to us, anyone can guess? My assessment for the market is 1 million, but actual situation is 0.25, means 25% of my assessment. How it will impact to the business entity? Okay, see,
Demand will decrease.
what will decrease?
Demand. The product.
Demand, yeah, correct. Demand will decrease, of course. But what is, I mean, if the demand is decreased, then what would be the risk for the business entity? Okay, what happened on the basis of business, market risk? Okay, we make a production capacity. Okay, capacity. Okay, and if because of wrong assessment demand get decreased, then this leads to the overproduction. Okay, demand decrease leads to the overproduction. Okay, or ideal capacity. Okay, see, one thing you need to understand, whatever may be the risk in a business, ultimately means we need to assess, and we need to reach what will be the impact on our EBIT or profitability margin. Okay, because of overproduction, there is a like how I can say dead investment. Means we do the investment but we are not able to get the return, and even in ideal capacity, whatever may be the profit we are going to earn, okay, that eroded because of under absorption of the fixed cost. Okay, variable cost it will not impact. Okay, because if we produce 100 quantity, then variable cost we need to incur only for 100 quantity. If we produce for the 20 quantity, then we need to incur the variable cost for the 20 quantity. Okay, but if we produce like 100 quantity, if my fixed cost is say for 100k euro, and if I produce 20 quantity, then my fixed cost is again 100k euro. So whatever may be, if I consider my contribution margin say for 10%, okay, and 100k euro and the 20k euro, my variable contribution margin means sale minus variable cost. If it is 10% to 10k euro, and here 2k euro. If my fixed cost is 5k, here I am able to earn the profit of 5. Okay, and if my fixed cost is again here the 5k, here I am going to earn the loss of 3k. So this way the risk affect the profitability, risk affect our overall strategy and the business objective. Basic business objective is basically to earn the profit, that you need to keep in mind. Okay, and then I mean particularly for the commercial organization, and for the commercial organization, and for non-commercial organization, it is basically like the business objective is to cater to the public, I mean the general public. Okay, so that is basically the objective of the business. We will see. Okay, so risk, I mean the market risk we explain, I explain in a detail, but compliance risk is basically if you're not comply with any regulation, then you may need to face the penalty. And again the investment risk, if you choose a wrong portfolio, then your return on your investment may get eroded. Okay, so these are basically the means how the risk will impact to the business objective. Okay, so risk is basically the possibility that event will occur and affect the achievement of strategy and business objective. Okay, so whenever we will take any decision, okay, or we decide to take any action, okay, it is always associated with the risk. Okay, now second is enterprise risk management. Okay, so why we need to manage the risk at enterprise level, or why not it is with the department level? Okay, first what is basically the enterprise risk management? Whatever may be the culture, capability and practices integrated with the strategy setting and performance. I mean whatever may be the strength of the organization, how I can utilize for production or value addition of the company. Okay, so that is basically the enterprise risk management. Okay, I mean like what happened, whatever the culture in the organization, say for like participation culture or dictatorship culture, okay, with this culture we can enforce the capability and we can enforce the practices which we need to follow in the organization. Yeah, are you able to hear me?
Yes, sir.
Yes, sir.
Okay, so yeah, if you have a doubt, just raise the answer. Yeah, Avantika, you want to say something?
Sir, can you please present your
Your voice, sorry, your voice is not audible.
Sir, can you please present your speech?
Can anybody, Avantika, I am not able to hear your voice. Any issue from any other student side?
No, sir.
No, sir.
Okay.
Avantika, can you write message in group or message box?
Yeah. Okay. So basically, enterprise risk means purpose of enterprises risk basically to we need to create a value for the organization. Okay. Then we need to like whatever may be my risk appetite. Okay, how much risk I can take. Okay, how much risk I can take, whether my actions are within that risk. Okay, then like improvement of my decision making means how I can how I'm able to take a more correct decision. Okay, and then we need to means we should be in a position to identify making, and we need to be in a position to identify any potential threat. Okay, so these are basically some benefit of enterprise risk management. Okay, and what is what we are doing enterprise risk management, whatever my culture, capability, practices that align in such a way that I am able to achieve the objective of the business. Okay, and I am able to realize the value, not only realize, create, preserve and realize the value. Okay, so that is basically the enterprise risk management. Okay, one question again, so what I ask in a start, can we manage the risk at a department level?
No, sir.
Why?
Sir,
The answer
compliance
is
risk.
right. Answer is right, but what is the logic behind it?
Sir, compliance risk.
No, that is okay. But like if I say for there is a risk in a finance department, okay, this is how I can say the double booking of invoice. Okay, double booking of invoice. Okay, so for that what I need to do always whenever I am receiving a invoice, okay, so I need to get the verification from store department whether I received actually the material or not. Okay, if I want to whether it is sufficient that only I need to see whether the goods are received or not, or there should be any additional further step required. Any guess?
You have to cross verify and communicate with the person whom we have sent the goods.
Okay, but any other document or any other process which also required to perform while passing the invoice? We need to check PO as well, right? Agar if I get the material and on the basis of that if I book the invoice, okay, I don't know who raised the PO, or who demand the material. Okay, if it is not for the use and just because I want to give a business to one of my relative, okay, so then it is basically the risk for the company, okay, because if I do the GRN, the material is lying with me, I am not able to utilize for creation of the value, okay, and after some days or some years I need to write off, so that will hit my profitability again, okay. Okay, then understanding the concept of for profit commercial entities and not for profit and government entities. Okay, so what would be, I mean, what is the objective of profit commercial entities basically? Okay, so it is basically generation of the profit. Okay, and non-commercial or government entity. Service. It is service. Service to general public. Okay. So this is basically means it is not every time the profit is an objective for any entity. It is basically sometimes the profit is an objective, particularly commercial organization. Okay, and if it is not for profit and government, then means how we cater the service to the general public. That is basically the objective of the organization. Okay. So whenever we are doing a business, we need to take decisions, okay, that we consider or called it as a management decision. Okay, what is decision? Okay, so why the management is taking a decision? What is the outcome of management? Means how we measure whether the management decision is correct or wrong.
If customer value is created or
Yes.
certain outcomes are achieved.
Created, preserve, not get eroded, and realize. Okay. See, why realize word is very much important. Means in books you are generating your net worth, but actually you are not able to realize the value. Then it makes no sense. Okay. So when I means you are running a business entity and you are creating a goodwill for the business, it is basically the creation. Okay. So, like if you are constantly maintaining the profitability, that means your goodwill still intact. Okay, so that is basically the preserved. Okay, if your volume get drop, okay, so that means now your value of the goodwill get down. So it is basically the eroded. And when you are selling an entity and if you are able to realize value for the goodwill, means whatever may be the net asset value, you will get the higher than that amount while selling the business. That means it is realization of the goodwill. Okay, so whenever you, management is taking a decision, the objective behind is whether they are able to create the value for the organization, they are able to preserve the value for the organization, they make sure the value should not get eroded. Okay, and value supposed to get realized. Okay, so this is basically the outcome of the management decision. Now the ERM and the strategy. Okay, any example for mission? Any example for mission, vision, and core value? Can you give? You can see what is mission, vision and core value, but can you provide any example?
Mission is, I believe mission is for short term basis. Setting up the goals each and every year depending on the market values and the strategies. Vision is the long term achievement which we have thought towards setting up the business, and core values are the management which are managing the business regularly by changing up the values along with the government and uh, peoples.
Okay. So any other thought?
The mission is the objective of the company.
Correct. Right.
Vision is what it aspires to be in the long term
Correct.
perspective.
Yes.
And core values are the values which it integrates, like honesty, integrity,
Correct.
ethical behavior, that it integrates in the organization to achieve those objectives.
Absolutely right. Willing to join. Okay. So, means how we drive the organization. Okay, that is basically the core value. Mission is basically what you are planning to do in a like how I can say that I am planning to provide a quality product, or I am planning to provide a cheaper product. That is my mission. And vision is basically in long run what we are going to achieve, or what exactly we are planning to means to whom we are serving, or I mean, it is a long-term achievement vision. Okay, so this is basically mission, vision, and core values. So whenever we build a strategy, okay, so we are building a strategy to achieve our vision, mission, and to maintain the core values within the organization. Okay, so enterprise risk management, what they are doing, they are managing the risk so that we can achieve our mission and vision and able to maintain the core value within the organization. Then culture, capability and practices. So what is the example, means the practical example of culture, capability and practices? It is very general word. Okay. So culture is again, means how we work in an organization. Culture. Can anyone tell? So, I mean, how you can predict the culture of particular organization is good or bad, or how you can evaluate?
Sir, on the hierarchy, the workflow, and how employee well-being oriented the company is.
Thinking
Behavior and
thinking.
uniformity.
Yes.
Yeah, behavior and uniformity.
Yes.
In a way the work moves.
Yeah,
In
correct.
what hierarchy the work moves.
Right. And what about the capability? Organization capability, not the people capability.
By looking at the progress of the organization.
No. I mean, yeah, but to some extent.
Capability in the sense, sir,
Sorry?
The clients that they have and the clients they have and the scope of work the company is executing.
Yeah, means the product which they are executing.
Yeah.
Okay, correct. Okay, so it is in simple word, it is the strength of the company or organization. Practices, this is very simple.
Practices in the sense, the rules and regulations in the company, are they adhering?
Yes, processes and systems, means how they perform their duties. Okay, so these are basically the culture, capability and practices. Okay, so means you can manage the risk by maintaining the proper culture, by maintaining the proper capability and by following the proper practices. Okay, so core values always correlate with the culture. Okay, how we can manage the risk? Okay, when the companies, like how I can say, companies bringing some changes, like earlier we are doing an accounting on Tally, but now we shifted to SAP.
Reviewing it continuously.
Reviewing it continuously. Yeah. Any other approach?
Testing it in a smaller proportion first to make sure it functions properly.
I mean, the kind of prototype you are saying.
Yes.
Okay. What is the most important thing? Means this is also the requirement to motivate the people for a change. Okay. People for change. Okay. So here your culture works, your core values works. Okay. So whenever like if I mean the management is giving a decision and if the team is ready for the execution, that means you have a proper culture within the organization. Okay. Now okay, why we need to set the strategy?
Maintain uniformity among the employees and achieve the goal.
Yes. So it is achieve the goals means achieve the first is basically align with vision and mission. Of course, goal also. Okay. Once I set the strategy, what is the outcome of this setting of the strategy? Why we set the strategy?
To achieve business goals and
Yeah, business objective. Okay, so business objective is basically the baby of the strategy. Okay, and after that, once I set the business objective, that I can perform my operational activities. Operational activities means like the production, dispatch, finance, means what exactly we are doing activity in the organization. Okay, so generally vision and mission, okay, so they are associated with the strategy and objective. Okay, and the culture and core values, they are associated with each other. Okay, so managing risk linked to value. Okay, what do you think? Do we need to manage all the risk?
We should minimize the risk as much as we can.
What is why means to what extent we need to minimize?
So till the percentage of how much the company can take or the
Yeah,
organization can
so it is up to risk appetite. Okay, so if I have a capacity to take the risk of say for 100k US dollar, then I supposed to manage the risk up to that level, not to the zero level. Okay, then second aspect is basically if the cost of managing risk is more than the benefit which we can derive, so in that situation also can we need to incur the cost for managing the risk?
We could change the strategy if we can.
Yeah, but my cost is more than the benefit. Say for like I am raising a 10 invoice on a daily basis, and I may how I can say do a mistake for say for 10,000 INR on a daily basis. Okay, to verify that invoices I need to employ an additional person, and his salary is 20,000 per month. So it makes sense to manage the risk.
No, sir.
Yeah. So whenever you are taking an action to manage the risk, first you need to evaluate the cost benefit analysis. If the benefit is more than the cost, then and only then you need to manage the risk. Otherwise, you need to accept the risk. Okay. Then risk appetite. So how we come to know what is my risk appetite?
It's the assumptions initially which we take in the business. This kind of risk might occur.
Yeah, of course. This is the assumption, 100%. Okay. But like say for, I mean, in monetary terms, of course, it is an assumption. Okay. So, but means how it is flow. Like whenever I'm deciding any strategy, or whenever mission or vision. Okay, so at that time what happened means I come to know, if I say for I decided to give a cheaper product to my consumer. Okay, but then there is a risk of non acceptance by from consumer side. Okay, so if there is a non acceptance, to what extent the company should bear the losses. Okay, so always risk appetite flow from your mission, vision and strategy. While building a strategy, you need to keep in mind what is your risk appetite. Okay, so it is basically first expressed in a mission and vision, and then we need to evaluate from strategy point of view. Okay, and I mean, it is risk appetite is always I mean, so you cannot assume in absolute terms. It is always in a range. You need to decide. Okay, and it is always changing with respect to the time. It is always change. I mean, it is always different for different industry, different product, different business unit. Okay, then value and the risk appetite. what is the relation between value and risk appetite? You can give practical example also.
Risk appetite is the initial assumption and the value is the actual derivation of the product.
Yeah. So how they are correlate with each other? If we maintain the risk appetite, then what we can do?
We can easily take the value out of it.
Yeah,
The value increases.
yeah, we can create like what are the four that create, not eroded, then preserve and realize. Okay, so this way the risk appetite. I mean, the first thing, if we are doing assessment of a risk appetite, that means we are planning to manage the risk to some extent, and this will affect to value of the organization. Okay, so some example, if you just a practical example from manufacturing unit. Okay, so like my experiences in mostly in a manufacturing unit, so I'll give mostly the example from manufacturing unit. Like product quality is an issue for any organization. Okay, but this is the kind of low risk level. Okay, if I use the proper raw material, if I have a skilled resource, okay, so I do not require to put much effort to manage the product quality. Okay, but I need to maintain the quality team within the organization. Okay, so in that situation, my risk appetite means like willingness to take the accept the risk is basically low. Okay, delivery schedule, particularly when you are selling a customized machine. Okay, so you are not customized. What is the difference in standard machine and customized machine? Standard machine means everything is a set. You need to repeat. Means whatever may be the manufacturing process that you need to repeat. So that's why you can easily assess the delivery schedule, and to manage this is easy task. But in case of the customized machine, you cannot assess the delivery schedule. When sometime there is a trial failure, sometime the requirement from the customer get changed because it is a customized. So customer may means at the time of giving an order, his requirement is something different, then it get modified. Okay, so in that situation, or there is always a risk level is medium or high. Okay, sorry, medium you can consider, because the example for the high is basically when you are doing a certain innovation. Okay, the success of the innovation is very much unpredictable. Okay, and because of that reason, like if you do the accounting, so unless and until there is no technical feasibility, you need to expense out whatever the expenses incurred for technical innovation. Okay, and if it is feasible and the commercially viable, then and only then whatever the expenses incurred for technical innovation, that you can capitalize. Okay, so here the risk level is very high. Okay, so this way you need to decide the risk appetite. So risk appetite you cannot decide only on the organization level. First you need to decide on a like functional level or the department level, and then you need to decide on a organizational level. Okay, then enterprise risk management framework. Okay, so this is basically they have a 5 component, and then there are more than 17 to 20 principles. Okay, so that we see one by one. Okay, so if you see this, first we need to decide the mission, value, and mission, vision, and core value. Vision and values. Then you need to do the strategy development. Okay, then business objective. Means the business objective is basically the product of strategy development. Once you decide the business objective, then it is an execution. And evaluation of the performance. Okay, and after that, enhance value. Enhance means the value creation, I can say. Creation and all this four. Okay, so this is basically how we need to drive the business. Okay, first you need to decide what is the mission, vision and the value for the organization. Then you need to develop a strategy on the guidance of mission, vision. After that, once you develop the strategy, then you come to know what is my business objective. Once you are aware about business objective, then you need to execute the plan. You need to evaluate the performance. If your performance is good, then value of the organization get enhanced. Okay, so these are basically like 5 components for managing the risk. It is given by the COSO. Okay, so COSO is basically, the full form of COSO is Committee of Sponsoring Organization of the Tradeway Commission. Okay, so there is a, this body also gave the structure for the internal control as well. Okay, so but I think in like bar we need to study only enterprise risk management. Okay, so these are the 5 components: governance and culture, strategy and objective setting, performance, review and revision, information, communication and reporting, which is ongoing. Okay, so okay, so this 5 component means and there are 20 principle. Okay, so that 20 principle bifurcated in this 5 component. Okay, so governance and culture. Okay, so whatever may be the strategic decision or the decision to be taken by the owner, okay, that arises in the governance and culture. Means whenever you may get the question in the MCQs that which principle belongs to which component. Okay, so at that time I'll just giving in some idea, means that way also you can think, so that you can easily understand how you can bifurcate the principle in a 5 component. Okay, so governance and culture is basically whenever there is a decision making required from the top management. Okay, so that comes to the governance and culture. Okay, strategy and objective setting, whatever may be the issues related to the driving the business, that comes under the strategy and objective setting. Whatever may be related to the execution and the performance, once we set the objective, okay, once we set the strategy, then how we are perform and how we are measure, that comes under the performance. Okay, then whatever may be the outcome of the performance, means either it is positive or negative, then you need to review and revise it. Okay, so that comes under the review and revision. And whatever may be the outcome of review and revision, that we need to communicate to the appropriate authority, department head, board of management, like this. Okay, so this way you can evaluate. We go one by one. Okay, so governance and culture, the 5 principles define desired culture. So it is that decision taken by the management. Then exercise board oversight. So it is board oversight, not the department oversight, which is also the responsibility of the board of management, means the top management. Demonstrate commitment to core value. Okay, why it is the responsibility of the top management? Demonstrate commitment to core value. Anyone can guess why it is the responsibility? As I said, means whatever the responsibility of the decision making taken by the top management, that is the part of governance and culture. So why it is the responsibility of the top management to demonstrate commitment to core value?
Because they are the ones who regulate the middle management and lower management also.
Correct.
They have to lead by example.
Yes, they need to set up an example. Okay, so if like say for ongoing organization, okay, ongoing organization means the management has not given any direction that they are selling an organization, but main asset sold by the top management without information. Okay, so it is a clue to the middle management or the lower management or the execution team that the company is not going well. Okay, and in that situation they also started to misappropriation of the fund, okay, or the asset of the organization. That's why it is the primary responsibility of the top management that they should work in a such a way such a way that they are able to set an example that they have a commitment to core values, okay, and which is followed by the lower level team members. Then attract, develop and retain capable individual. Yeah. So retain and attract capable team. Why it is required within the organization? And first,
This would lead the motivation.
yes, it
towards
leads
the
the,
employee.
correct, absolutely leads the motivation, and it looks like the management is taking unbiased decision. Okay, so everybody is they are getting energy to work in a positive way. Okay, so and why it is the responsibility of the management or governance, why it is a part of governance and culture, because it is again like a commitment from the top management that they want to drive the business in a proper manner. Okay, then establishing operating structure. In exam you may get the practical example or sometime even the simple principle. Okay, so when you read this 5 principle, I think you are able to see on screen. Okay, do you think all the activity to be done by top management or any of the activity which is done by the middle management or a lower level execution team?
The activities should be delegated among all the management teams so
Yes.
that it would work properly.
Yeah, establishing operating structure, correct. But who's supposed to delegate? Again, it is a top management. So that's why it is a part of governance and culture. Okay. Now my question is like define desired culture. Okay. Can this activity done by middle management?
Yes, it can be done by taking approval from the top management and
Yeah.
delegating the activities to lower management.
Yeah, again. So top management approval is required. So who is the final decision maker? Top management. Okay. Exercise board oversight. It is a simple. It is the board responsibility. I mean, if it is at a board level, oversight is required. Then it is a board responsibility. Demonstrate commitment to core values. So top man first need to demonstrate. Then and only then, like the middle level or the next to the top man started to demonstrate to commitment to core value. Then attract, develop and retain capable individuals. So this is also the final authority or the final decision making is associated with the top management. Okay, and the established operating structure, so it is also the responsibility of the top management, and then they can hand over to the middle management for the execution. Okay, so what I want to communicate here, whatever may be the action or decision making which is expected from top management, this is the part of governance and culture that you need to keep in mind. Okay, then strategy on objective setting. Okay, so first evaluate alternate strategies. Okay, it is not related to the decision making. Okay, so it is evaluate alternative strategy. We are not finalizing the strategy, final strategy. We are just evaluating. Okay. Second, formulate business objective. If you see here, like finalization of the strategy is missing. Direct formulate business objective. So business objective is basically the outcome of the strategy. So strategy is final by the top management. Okay. So these are the activities which supposed to do. Okay. Analyze business context. And then define the risk appetite. Okay. So these are the activities which is carried out by top management with the consultation of the middle management. Okay. Are you able to understand? Anyone has any doubt here? Okay. So we can take one by one the practical example. So evaluate alternative strategy. Can you give any example? Any guess?
So, for example, they might use a different strategy for production, but they can keep an side option for any
Manual,
other strategy. Like,
manual and machine. Okay, so these are alternate strategy, alternative, evaluate alternative strategy. Either I can perform a particular process manually or I can use the machine. Okay, then formulate the business objective. We should go with this example only. Any example? If I use the manual, then it may possible my production is less. Okay, and if with I go with the machine, then my production is high. Okay, once I decide my strategy, then I can formulate my business objective. Means how much I need to produce. Okay, so like like my capex is my business objective, production. Okay, so that I can decide on the basis of strategy. Then analyze business context. What is the example for analyzing business context related to strategy and objective setting?
it describes the nature of the business and what it requires for growth.
Okay, see, we go the same example. Like if I go with the machine, okay, then what I'm going means why I'm more competitive than my competitor, okay. And if I go with the manually, then it is of course the price is very less. Means the end product price is less, okay. Here the quality, standard. Okay, so these are my business context. Means what is the competitive advantage I can gain here? Okay, and then the define the risk appetite. I means if I go with the best, like the price is very less. Okay, so risk is basically the product may not be acceptable. Okay, but if there is a quality is there, standard is there, okay, in that situation a volume may be, we cannot project the proper volume. Okay, I tell you something, if the product is costly, then acceptability may not be the issue. Okay, because means whenever you are seeing in a economics inferior goods and normal goods, okay, if you are with a quality product, then whenever there is a profitability arises to the end customer or they can generate a value from your product, they are happy to pay the prices. Okay, but if you are manufacturing cheaper product, then sometime it may possible like the product may get rejected because it will not perform whatever may be the requirement for the requirement of the customer. Okay, so these are basically the risk. Okay, so that we need to decide and to what extent we can accept the risk. Okay, so this is basically strategy and objective setting. So evaluate alternative strategies, whether I need to produce from the machine or manually. Formulate business objective. If I produce from the machine, then I can bet on the technicality or the standard or the quality of the product. But if I produce manually, then I need to float the product with the lesser prices. So that is basically the business objective. Analyze the business context means business objective, analyze the business objective is basically the what is my capacity production, and the whether if I go with the manually, then my production is less. Okay, analyze the business context means the quality issue, whether I bet on the quality or the prices. And define a risk is if I keep if I produce a lower price product, then the market may not accept the product. Okay, or the product failurity. And if I produce a quality product, then volume is volume we cannot identify correctly. Okay, so these are basically the on that basis I need to decide the risk appetite. Okay, then performance. Okay, so in performance means the related to the ERM, there are 5 principles. Okay, so we need to see and we need to see means what would be the example, practical example. Okay, so first, develop portfolio view. Here actually we started to identify means we decide the risk appetite. Okay, and here we started to manage the risk actually. So that's why first develop a portfolio view means the what are the risks associated with our action. So here we maintain all the risk. Okay, so portfolio view means we prepare a list of risk associated with the action. Okay, so it is a kind of identify the risk, all the risk. All. Okay, then the next step is assess severity of the risk. Why we need to assess severity of the risk? Any guess?
To let us know if the cost is exceeding the benefit.
This is the one issue, yes. Okay, so here basically we need to understand the frequency of the risk and impact of the risk. This is basically for the action, whether we need to accept or not. But when we are assessing the severity of the risk, we need to first understand the frequency. Means if the chances of the risk is remote, okay, and the impact of that risk is very less, then we can ignore that risk. But the frequency is very high, means it is a repeated risk, and impact is also high, so we need to prioritize. So we are assessing the severity of the risk to prioritize the action. Okay, so it is basically frequency and impact evaluation we are doing while assessing the risk. Okay, and after that we prioritize the risk. Okay, if the impact is high and the risk is frequent, then we need to give a first priority. Okay, like it is basically the impact and frequency. Okay, so it is 0, plus 1, 2, 3, 4, 5, minus 1, minus 2, minus 3. So it is low side, it is high side. Here also it is plus, here also it is minus. Okay, so first priority goes to here. This is the first priority, means the impact is high, frequency is high. Okay, here impact is high but the frequency is less, so it is basically the second priority, because impact is high, so that's why we need to give a focus. Okay, then frequency is high but impact is less, so third priority. And when there is a frequency is also less and impact is also less, so it is for priority or ignore. Okay, so this way we need to prioritize the risk. So then identify the risk, means to determine the action we need to understand the risk in detail. Okay, so how we identify the risk? Means like we decided to go first go with this approach. So say for means if you have an office where there is always natural calamity. Okay, so in that situation you need to make an arrangement of alternate site. Alternate site means whenever there is a effect of natural calamity, then you can shift your operation to the alternate site. So this is basically the risk event which you need to identify. Okay, once you identify the risk event, okay, then you need to decide the action on the risk event. Okay, so there are 4 type of action, mostly 4-5 types. Okay, so it is whether it is given or not. Okay, this is like the 4 actions are transfer, avoid, accept or reduce first, and then accept. Okay, So these are, means generally I called it as a TARA: transfer, avoid, reduce, accept. So these are basically the um, actions which we can take once we identify the risk. Okay, so can you give practical example for all this risk responses? Anyone? First,
Insurance.
insurance. Yeah, insurance means it is a transfer of risk or share of the risk. Okay, when we took an insurance, okay, so that what does it mean? Means if any losses happen, it is the responsibility of the insurance company to make out these losses. Okay, so we are transferring the risk or sharing the risk. What is the example of avoid?
Selling the item itself that is containing risk.
Selling the item itself. Yeah, or I can say not to enter in a market, or the product development. Okay, means we are not taking a risk at all. Okay, say for if my product I manufacture for the particular particular customer segment. Okay, so I cannot modify that product, or I should not modify that product and try to cater to other set of customer. Okay, sometime it get fail, so it is basically to avoid the risk. Okay, reduce.
Accepting machine language, then manual.
Yeah, so this way we can reduce, means we can get the more accuracy and reduce the error. Correct. Except,
Maybe it's the remote risk which is not that much prioritized.
correct. So we should not take any action, right? To take any action. Okay. So accept and sometime pursue, this more or less the same thing. Means we are taking a risk to achieve a particular objective, and accept means if it is in routine activity, we are not implementing any control procedure, that means we are accepting the risk. Okay, so this way you can keep in mind. I generally keep in mind the word the TARA, means transfer, avoid, reduce, accept. Accept is more or less equal to pursue. So these are basically the implementation of the risk responses. Then we need to see review and revision, and it has a three principle. Okay, so we will discuss the practical example of this three principle. Review and revision. Okay, so first one is assess substantial change. Any example?
any unforeseen situation arises during the progress of the
Correct.
management.
Yes. So impact of any situation external. Any situation to strategy. Okay. So any practical example?
Natural calamities.
War. Means I open the office in Russia and then there is a war between Russia and what is the other name of the other country?
COVID-19.
Yeah, COVID-19. Okay. So these are the like the situations which is not in our control but impact the business strategy. Okay. So this is basically the substantial change can happen. Okay. And even if you see like earlier we have I don't know you people are heard pager. So pagers means when the pager get developed and within a very short time the mobile technology get developed. Okay, so it will impact the pager business and the like the developer of the pager not even able to recover their cost, development cost. Okay, so these are basically the substantial changes which may happen and impact the business strategy or the objective of the organization. Okay, so that we need to assess. Okay, this is not in our control, that also you need to keep in mind. The strategy and objective setting and the performance is related to the our control. Okay, so pursues, then second is pursues improvement in enterprise risk management. I mean here the action on the substantial changes. Any practical example?
Like how the lockdown has occurred after COVID-19 happened. That was the same action taken by the PM.
Right. So in COVID period, what happened? Everyone approached to the banks for moratorium for 1 year to 3 years. Are you aware? I don't know. Okay. So because they are not able to generate the revenue, and because of that reason, any EMI pending or any interest expenses they need to bear business entity. Okay. So that for that they approach to the bank for the some extension. Okay, so these are basically the action on substantial changes. Okay, second means I'll give this is basically we are talking about the strategic point of view. Then we will discuss in review and revision operational point of view as well. Then the review risk and performance means what is the last review?
How the performance has been arised based on the substantial action taken place.
Yes, correct. Okay, so whatever the action we took, okay, so what is the outcome of that action, whether it is desired action or not. Okay, so that we need to evaluate in this principal review. Okay, in operational way, say for you are preparing I mean you are not preparing the bank reconciliation in and if you find any unaccounted checks or any unaccounted receipt. Okay, so in that situation you start to prepare the bank reconciliation. This is basically the pursue improvement in enterprise risk management. Okay, first you assess that bank balance is not balance as per bank statement is not matched with the balance as per the bank book. Then I mean because it is not matched, that's why you decided to do the bank reconciliation statement, and on the basis of bank reconciliation statement whatever may be the pending entries that you need to account for. Okay, so these are this way you, like in operational issues review and revision work. Okay, then information communication communication and reporting. So it is simple actually. Whatever may be the outcome, this is basically the information you need to communicate or report to the appropriate authorities. Okay, so how you can gather the information?
From internal and external sources.
Yeah. Internal and external sources. To get the information is not the only task, you need to organize by using technology. Okay, that means you are preparing the report. Okay, so it is basically use of relevant and quality information from the internal and external sources. Okay, so like for example, if you maintain online data, so you can immediately your query get immediately answered. Okay, so this is leverage technology, information and technology means you need to get the information and then you need to organize in such a way that you can utilize for the decision making. Okay, then communicate risk information. Communication. You need to means you have a information, then you need to communicate to appropriate authority. Okay, so for example, if your customer bankrupt, okay, so whatever means whoever may be the salesperson who handle this customer, he need to give an information to the across the organization so that we can stop subsequent dispatches. Okay, so whatever may be the information you have, that you need to communicate to the appropriate authority, and then the report on risk, culture and performance. So it is a simple dashboard or any form of report which we need to present to the management on a particular interval, say for monthly, quarterly, half yearly or annually. It is like this. Okay, so these are basically the 5 component and the 20 principle related to the enterprise risk management. Anyone has any doubt on it? Okay, so can we take a 15-minute break and then we start?
Yes, sir.
Yeah, okay
Sir.
then.
Yes, sir.
So we gather at 8:45. ఆఫీస్ నుంచి చూస్తున్నారు వీడియో ఒకటి याचं नाही इश्यू
नाही 2 मिनिट होतं
तीनच दिलं फक्त चाललंय ना
नाही व्हॉट्सअप लिंकवर झालं ना लिंकवर झालं ना सर
15 मिनिटाचा ब्रेक
ब्रेक आहे ना तुम्ही डायरेक्ट कट केलं तर ते म्हणून झालं ते
सगळं व्यवस्थित आहे का ते चेक करू
हां बाकी सगळं व्यवस्थित माहीत कुठे चालू
ते पॉज केलेलं आहे का ते
हां पॉज केला आहे
ठीक आहे
हां
10 मिनिटांनी ते लक्ष ट्युशन चालू करायचं
हां हे असं हे ओपन ठेवतो ना बाजूला ना ते पॉजचं तिथे जे एअरपोर्ट आहे तिथं ते चालू करायचं
Settings सगळे बघून घेशील. Okay. तेच चालू. Okay, so can we start now? Am I audible properly?
Yes, sir.
Yes, sir.
Okay, now we need to see benefit and application of ERM framework. Okay, so what are the benefits of ERM framework? So here the 4-5 benefits given. So increase the range of opportunities by considering all reasonable possibility. Okay, so what happened? Like whenever we introduce ERM, we need to evaluate what are the alternatives available with us. So this will give a range of opportunities by considering all reasonable possibility. Second, increase the positive outcome and reduce negative or unexpected outcome. So we are basically prepared for a certain situation. Okay, while when we are implementing the ERM, so one particular team, they continuously monitor or they continuously foresee what would be the impact of any internal or external aspect or issues, okay, on the objective of the organization. Okay, so because of that reason, we have a prior information and we can take a corrective action. So then better manage entity wide risk. Okay, so if we are maintaining the enterprise level, so sometime what happened, the risk associated with one department may counter or may dilute by the action of other departments. So we do not require to implement risk at a particular department level. Okay, so this will give a benefit of means with a less efforts we are able to manage the more risk. Then reduce performance variability by better anticipating risk and minimizing their impact. So as we are managing the risk properly, so variability means the performance, we may get the consistent performance, because whenever some uncertainty may arises, it is properly evaluated and we can take an advanced corrective action. So that uncertainties may not impact the performance. Okay, and improve and optimize the use of resources. So as I said, and if we maintain instead of maintaining department wise risk action, we maintain at an enterprise level, so it will give a good result with a lesser efforts. Okay, so this way we can improve and optimize the use of resources. Okay, then I mean some other risks are basically how we can say, like we can protect our asset, we can protect our goodwill, then we can maintain the investors confidence or the stakeholder confidence. If you give the risk report to your investors on a on some frequency, maybe monthly or 6 monthly or yearly. So in that situation, the investors may get the confidence. Okay, in the organization you can promote the risk averse culture. Okay, so these are some benefit of enterprise risk management. Okay, then application of the risk management concept. So where we can apply, we can see. So at all level we are apply the risk. So instead of going this, because it is just like a some text or point, I can give some example like strategic planning. Okay, strategic planning. Okay, what is what is the benefit if I apply ERM in strategic planning? Any example? Like what is the strategic planning? First means the action at the on the board level, like new product development, new market area. Okay, so while
Work process will be smoother.
sorry,
Work process will become smoother
yeah,
if there is a strategized plan.
yes, process is smoother. Okay, so correct. So like basically whenever you are entering into the new market, okay, so what you need to check your supply chain. Okay, then if I consider the geographical, then the rules and regulation of that country. Okay, customers acceptance, and financial risk. Financial risk. Okay, so there may be certain some other point as well, but before entering into the new market, if we plan properly on all this aspect, then our work process gets smoother. Okay, so this is basically the benefit in a strategic planning. Then project management. If you are if you are going on an audit, that is also the one project basically. What you can do, if you use the ERM in project management, timeline, then resource allocation, cost, okay. So this like if you do the risk management in a project management, then you can evaluate whether your timeline get exceed or not. You can properly allocate your resources. You can control your cost overrun. Okay, so these are benefit in a project management. Then supply chain management. Means first you need to understand the risk. Means it is only means how I can say the the thought process you need to give on a practical situation, whether there is a risk or not. Means in case of the project management, okay, so whether you are able to complete the project on time or not, so that is basically the risk. So timeline is a risk, whether you have a proper resource or not, whether the cost get in means overrun or not. Okay, so these are basically risks. So this risk you can manage with the ERM, enterprise risk management. So the same way in SCM. Any guess?
Logistics services.
Logistics, yes. If particular country ban a particular import or export of the product, okay, so then there is an issue in SCM. Any other? Single source, multi-source.
Any custom related
Yeah,
tariffs?
so yeah, custom tariff. Okay, and any political or natural calamity situation. Okay, so this may, because of that reason, your SCM, I mean the supply chain may get affected. Okay, so you need to manage all these things. Financial reporting. Is there any risk in financial reporting?
May not be accurate enough.
Correct, may not be accurate enough. So there is a short provision or excess provision. Always, this is a risk. Okay, identification of the nature of expenses. Nature of yeah, expenses or cash outflow, inflow, both. Even in revenue recognition there is a lots of concept. Okay, so these are basically the risk in financial reporting. Means you may get the money from the investor and you accounted this as an advance from customer. Okay, so that is basically the, means you are showing, instead of capital you are showing the liability. Okay, so this may affect the financial reporting. The same way compliance and legal. So it is clear, means if you broke any rule, then you may need to face the penalty. Okay, so you need to appoint a proper consultant who can support for a timely compliances. Okay, and the most important, crisis and business continuity planning. Okay, so flood situation, fire, COVID, okay, war. So in that situation, how we can maintain our businesses? Okay, so means how it applies, means you need to evaluate in a current scenario whether I can run my business, and is there any external or internal situation arises which may affect my continuity plan. Okay, so these are basically the crisis and business management. Okay, so these are basically the example of the application. Okay, so this theory you can read actually. Yeah. Now we need to see application of ERM to environmental, social and governance risk. And we need to give the practical example. So what is ESG? Environment, social and governance. Okay, Any example for environmental?
Global warming?
Sorry?
You're asking the risk, sir?
Example. Means in ESG, what is basically the example for an environmental situation? Here it is given um, pollution, deforestation, and climate change. Okay, so any practical example means if you run any business unit, so what would be the practical example?
If we are manufacturers, the gases which are evolving
Yeah.
from the factories.
Yes, any hazardous material, utilization as well as disposal. So, utilization or disposal. Okay, so we need to control the use of hazardous material. Okay, so we can implement some ISO standard. Okay, and you can manage your risk. Okay, next, social. Like it is given here, such legal and social matters as occupational health and safety, customer relation, employee relation, and human right. So these are social issues. So what would be the social impact and how we can manage the risk?
For example, there is a chemical factory. So what all outputs which are released and which is it harmful for the people who are working over there?
And
we can analyze.
Yeah, and the people residing in surrounding areas. So whatever
Yes,
may
yes.
be the impact to workers and local citizen, right? Okay, so how I can say, so what is basically how you are going to manage the risk? What is the first you need to identify the risk. There may be an impact to the worker and local citizen. So how you are going to manage it? Any guess?
By reducing the wavelength and frequency of the inputs.
Yes, correct. Okay, so you need to first take an approval from pollution control board. Means every state has a body. They identify, evaluate, and allow to use of this kind of chemical or the material. Okay, so you need to take an approval from the pollution control board. Second, there may be a certain safety instructions, okay, which you need to give your worker as well as the local citizen. Okay, and there should be a proper whistleblower mechanism. Means like if the top management is not doing, so someone should report is to appropriate authority. Okay, so these are basically the risk responses. Then governance. Two.
Is it related to the laws and regulations not complied with?
Ethics, non-compliance with laws and regulation. Board oversight. It is the responsibility of the board governance. Okay, if the board is lethargic, then everybody goes fail. Internal control. Okay, so these are basically means risk related to the means as per the governance. These are the areas where there may be a risk. Okay, how you can tackle this situation, or how you can minimize the risk? Any guess?
Communicating with all the management and following the rules.
Correct. Training. We need to give the training to the people for following the ethics. Strict board oversight. Internal audit. Okay, so this way we can manage the risk related to the ESG. So it is more or less same which we saw. So here you can read it. Means if you see, means there are certain more examples given here. Okay, like hiring processes. Okay, in the governance. So there are certain other examples given here. Yeah, any doubt till now? Benefit of ERM. To ESG. Any guess? ESG become part of the ERM. Second, compliances related to the ESG as well as the business objective. We can gain the trust of shareholders or all stakeholders instead of all stakeholders. All stakeholders means customer, vendor, government, employee, all are covered. And protect oblique build reputation. Okay, and the long-term sustainability. So these are basically the benefit of ERM in ESG. So mostly, I mean, ESG is basically the compliances. Okay, So when we attach the ESG with the ERM mechanism, so we can identify the risk of non-compliances or whatever may be the alternative available with us, okay, and then we can take an action accordingly. Any doubt till now?
No, sir.
Okay. So anyone feel it is fast, or I mean, what is your feedback, views? Because today is the first day, so no feedback right now, right? Now the trade-off between the risk and return. Okay, so why we say we need to consider optimum. We need to how I can say. We need to select a situation where we can minimize the risk and maximize the return. Okay, so can you give one example?
Minimizing the manual related risk and choosing the machine language so that the returns would be easily available.
Reduce manual risk, okay, and it support to increase the return. Okay, so if you reduce the manual risk, then that means the mistake can be avoided and we can utilize the resources for maximizing the return. Okay, so can you give some areas where we need to make a trade-off between risk and return? Means we need to avoid the risk and maximum return. Some areas. Any cost saving mechanism. For example, regular electricity to solar. Okay. So while implementing the solar plant, we need to incur some capital expenditure. Okay. So we need to decide what is the benefit of incurring this capital expenditure. I mean, there is a mechanism where we can calculate the net present value, and accordingly we need to decide whether we need to incur the cost to save the incur the expenditure to save the cost. Okay. So there is no any value addition. Okay, so your production not get increased, but because of incurring capital expenditure, there may be a future saving, and which help to recover whatever the capital expenditure we did. Okay, so any cost saving means the solar is one example basically, but any cost saving mechanism require a certain investment or time. Okay, but if we invest in a time, okay, then maybe in future we are able to generate some saving which is more than whatever the expenditure we incurred. Okay, this is related to the cost saving, and the second is production. Okay, again, if we have a manual operation and because of that reason, okay, means I have a say for 10,000 square feet plant and I can produce only 1000 quantity with manual operation in the same plant. Okay, if I install a machine, then I can produce a 5000 quantity. Okay, then whatever may be the gross profit I am getting with this 4,000 quantity, whether it is sufficient to recover machine investment. Machine investment means any incremental cost we need to compare with incremental revenue. Okay, so this is first we saw the quality, second we saw cost saving, second we saw the production where the output increases, third quality. If I am giving a better quality product, okay, then whether customer is willing to pay the premium. Are you able to get me? Product is same, but it is basically say for earlier particular phone life of the phone is 3 years, but now the life of the phone is 6 years. Okay, for that we need to pay 25% additional cost, okay, or additional price. Okay, so in that situation customer may feel like even though he is making a 25% additional investment upfront, but he may save the cost of other phone which he need to incur after 3 years. Okay, so he is willing to pay the premium. Okay, so whenever there is a quality improvement and what cost of quality improvement and whatever may be the premium he can any business entity can get, okay, so that is also the trade-off situation. We need to take one example of the ESG. If I implement the ESG, then I need to incur cost. Okay, so why I supposed to incur the cost to implement the ESG? I need to see some maybe not how I can say on immediate basis or not the quantifiable benefit I am able to get it, but because I am maintaining the ESG standard in my company, I am issuing the ESG report. This will build the customer confidence. Right now it is not compulsory in India, but in Germany, to the best of my knowledge, if we have 1,000 employees, then there is a certain rules you need to submit the ESG compliance report. Okay, so in India also for top 1,000 company it is applicable. Okay, so you can get the customer confidence, you can get the investor confidence. Okay, because you are managing the environmental issue, to some extent it helps us to avoid the penalty. Even though it is not compulsion, but you are, even for social also you can avoid some penalty. Okay, so these are the places where we need to trade off between the risk and return. Means we need to take some risk as we are incurring the capital expenditure. That means you are taking a risk, whether it whatever the expenses you did or whatever the expenditure you are doing, whether it encash the benefit or not. Okay, so these are the some areas where you need to trade off between the risk and return. Means you need to take some risk with the expectation for generating the return. Okay, now we need to see the type of risk behavior. Okay, and we will discuss some practical example as well. So risk DIFF different, risk averse and risk seeking. Okay, so risk risk indifferent. Okay, so what is basically risk indifferent means? Can anyone guess? When there is an indifferentiation means we need to focus only on a one aspect and other aspect we are ignoring. Means price indifference, whatever may be the price. Okay, customer is buying a product, he is only focus on a demand irrespective of the price. The same way, the people who are risk indifferent behavior, their target is to maximize the return irrespective of what they irrespective of the risk. Of risk. Okay, so risk indifferent means they want to maximize return, whatever may be the risk they disregard it or ignore it. Okay, so can you give any example?
Starbucks coffee prices are indifferent, and the people consumers prefers to
Buying
buy
it,
the
yeah. So
yeah.
correct. I means, but it is basically related to the economics concept, not like risk management. There is no risk actually. It is basically the demand and the prices issue. Okay. So for example, like expansion of the facility, irrespective of forecasting of the demand. Okay, so here we are taking a risk of expansion. Okay, we are ignoring, disregarding whether we will get the demand or not. Okay, so like entrepreneur want to maximize his production capacity so that he can float his product in the market. Okay, irrespective of the demand. Okay, so like I mean one more example, there may be a one domestic supplier and one the foreign supplier. Okay, but domestic supplier giving a how I can say lesser price. Okay, so irrespective of the quality, we choose to buy the material from domestic supplier because I want to maximize my profit. Okay, I am not concerned about the rest, whether he is providing the quality product or not, whether he meet the delivery time or not, that I am ignoring. Okay, so this is another example. So this is basically the risk indifferent, means you are disregarding the risk. Okay, and your focus just is on maximizing the return. Okay, then risk averse. So these people are conservative and they avoid the risk. So those investors who generally park their surplus money in nationalized bank, and in FD, fixed deposit. So like some of the people, they have an attitude not to take a single risk or a small risk, I can say. Okay, so that's why they decided to keep their surplus money in a nationalized bank in a fixed deposit only, not a single amount they park in a equity investment. Okay, so they are basically the risk averse. Then risk seeking behavior. So it is basically they are exactly opposite to risk averse, but they are doing trade-off. Okay, so they are willing to accept higher risk for high return. Okay, so investors investing in equity market instead of debt or FD. Okay, so they are basically the risk seeking behavior.
So, but every time higher the risk, higher the return policy doesn't apply, right? Whenever there is high risk, there can be possibility the returns won't be as much as we expect.
That is basically the outcome. But generally, the mindset or attitude is basically if you are taking a higher risk, then you accept the high return. Okay, so it is not like this. Like people are ready to take a risk for a low return. No one is going to take a risk for a low return. Sometimes people may disregard the risk. Okay, but no one disregard the return. Practically, it is not going to be happen. Okay, outcome may be something different, actual situation may be something different, but whenever like if you see the commercial nationalized bank and the commercial bank or the non banking financial company, they are giving a loan to the people with the expectation of 19 to 21% rate of interest. Okay, so it is not like but they verify the document and then they offer a loan. Okay, it is not the case they are giving a loan just someone come to them like this. Okay, in a practical situation everybody want to maximize their return. Okay, some investor or the some people or the business entity, they may disregard the risk, but no one disregard the return. Okay, if they disregard the return, that means it is a charity. Okay, so there is no question of risk management because he aware that anyhow my money goes zero. Okay, so there is no need for any risk management. Okay, so just keep in mind whenever there is I mean the person willing to accept the higher risk, his expectation for return is also high. Then some type of financial risk. So now we need to see the type of risk in a financial market with an example. So first, interest rate risk. Yeah. Any example on this? Means interest rate risk means we are issuing a bond to the public, or we are floating the bond in a public domain. So what is the interest rate risk? How it
Every time the rate of interest won't be same, it will be fluctuating.
So
that would lead to risk.
Yeah, but what is means if I gave a bond with a say for the 8% interest rate, okay, so like I need to pay the 8% on my face value. So what is the risk to the company?
To bear that interest rate.
But it is a fixed, there is no risk. Any guess? Any other? what happened if the market means at the time of float 8% is the market rate and the 8% is the declared rate or the coupon rate. Okay, so in that situation the face value is the market value. Okay, but if the market rate is increase 10%, then the bond value with the investor get decrease. Keep in mind, first start is basically bond is basically the long term bond. These are basically the long term, not short term. Okay, so first 2 year market rate is 8%, but after that if the market rate is 10%, okay, so on his investment he is getting a lesser rate, and if he want to sell it, okay, so say for bond value is 1000 which is generating the 8%, that bond can sell for a 800 if the rate of interest is 10. So value of the bond get deteriorate. Okay, so that is basically the impact of interest rate risk. Are you able to understand? Means the investor who hold the bond, okay, his net worth may go down because of interest rate increase in the market expectation, because of increase in expectation from the market.
Sir, what is the reason of increasing the rate of interest?
No, there is no reason, means there is no absolute reason actually. If sometime the demand increases, okay, so interest rate may also get increase. Okay, like everyone is looking for a loan, okay, so bank may increase the interest rate. Okay, if there is a cash scarcity, in that situation RBI also may increase the interest rate. Okay, so it is depend on the economic policy. Means if I like say for the government may decide that they do not want to keep a money in the flotation, okay, within the country. So in that situation what they do, they increase the interest rate and discourage the loan. Okay, so it depends on that. Then market sentiment, if we feel that there is no any impact in a futures, then we are okay to take a housing loan. If we are taking a more housing loan, then the demand for housing loan may get increased, and because of that reason bank may increase the interest rate. So it depends on the situation. I mean how much FD they have, how much inquiries they have for a loan. Okay, so on that basis it is decided. So there is no any single reason actually. But largely interest rate fluctuate with the government policy.
Yes, sir.
Then market risk and firm risk. Firm risk means risk applicable to particular organization. Market risk means risk applicable to entire industry. Okay. So market risk, why we call market risk as a systematic? And non-diversifiable.
Maybe we cannot diversify the risk to other departments and we have to overcome.
Correct. We cannot control by individual action. Okay. So that's why if the individual cannot take the action, so group cannot come with a common solution. So that's why it is not easy to diversify. Okay. And why it is systematic? Because it applies to all unit. It is not because of action of a particular unit. So that also you need to keep in mind. Market risk, systematic and non-diversifiable, and the firm specific means for a particular organization, that is unsystematic because it is because of internal action or internal decision. Okay, that you can diversify by changing the process. Okay, it depend on the one person decision. By changing approach. And we called it as unsystematic because it applies to a particular firm. Okay, so that's why it is not the systematic. Then credit risk. Any guess?
Lack of prepayments.
Lack of prepayment? No. Why? Means if someone is doing a prepayment, that doesn't mean there is a risk.
No, sir, repayments. Repayments are not
Repayment, yeah, okay. So see what happened, sometime the borrower defaulted earlier loan. Okay, because there is a separate risk of default risk, so that's why it is not, I mean the credit risk is not because of default. He defaulted earlier loan, that's why the banks or lender not ready to give him a loan with market interest rate. So here because rate, okay, so here risk is more. Okay, so lender expect premium. So particular organization don't have sufficient credit so that he can secure a finance with a market interest rate. If he want to secure the finance, he need to pay additional premium. So that is basically the credit risk. Then default risk.
maybe due to insolvency company
Yes.
has declared
Yeah.
default.
Yeah. Or lack of proper cash flow. He is not able to pay the EMI. Okay, so that is basically the default risk. Liquidity risk. Default risk arises mainly when you incur a heavy capital expenditure and accordingly you will not get the orders. So in that situation you cannot repay the loan which you took for a expansion of the facilities or buying the machine. Okay, liquidity risk. Not able to convert fixed asset to liquid asset, liquid or cash. To cash. Not only fixed asset, any security. if I want to sell my business, it is not easy to sell on immediate basis. Okay, you cannot convert, even though that business has a net worth or the market capitalization, but you cannot convert it is easily in a liquidity. Okay, so that is basically means you have some asset, shares, fund, bond. Okay, but you cannot encash against the cash. Okay, so that is basically the liquidity risk. Then price risk. Any
Due
guess?
to huge competition,
Yeah,
the market is not stable.
price sensitive. Okay, so yeah, so sometime what happened means here they gave an example like the investors have investment. Okay, and after that the price goes down. Okay, of those investment. So this is the example given here, but one better example means I feel sometime what happened in a business you have a yearly contract. Okay, for buying a particular commodity. Okay, for certain, I mean say for like 1000 per kg. Okay, but like, and there is a penalty clause. Okay, say for 5 lakh if you cannot complete the order. Okay, so in that situation, if tomorrow the prices go down with a 800 per kg, so it is loss to the buyer. He could have a buy with a 800. Okay, but because of contract he cannot take the benefit of 800. So this is basically the price risk. Okay, and vice versa also can happen. Okay, so like it is the price may increase to 1200. Okay, but in that situation seller compelled to buy at a 1000. Okay, so this is basically the price risk. So here they gave the price risk is related to the diversifiable, because you can go to the future and option and you can manage your price risk. Okay, so that's why it is a unsystematic and you can manage it, diversify or you can manage it. Any guess, any issue till now?
No, sir.
Okay, then computation of the return. Okay, so this we need to understand the terminology. Stated interest rate. Stated interest rate means rate declared on the security or coupon rate. Coupon rate. Okay, so it is basically the means interest charge before any adjustment for or for compounding or market factors. Okay, so these are basically the stated interest rate, or you can consider coupon rate or declared on security. Okay, computation stated rate is the rate shown in the agreement of indebtedness. So it is very easy. Like here you can take an example. 1000 promissory note state that payment will be made quarterly at a 10% interest rate per annum. Okay, per interest rate is per annum, but you need to pay the quarterly. Okay, so what happened? 10,000 for first quarter multiplied by 2.5%. Okay, so whatever may be the amount, that is basically the interest. Then effective interest rate. Interest rate. So in effective interest rate, stated interest rate could be something different, okay, but like how I can say, because of some reason, whatever may be the amount you borrowed, you are not able to utilize actually. I'll give one example. Here what happened, the loan of 10,000, which is as it is, means you can utilize entire 10,000, okay. But if the condition from the bank for lending is 10%, you need to keep as a compensating balance. Compensating balance means you need to keep it in a bank, okay, so that whenever there is a interest or any bank charges, they can deduct it from that compensating balance, okay. So what happened, you can utilize 9,000 only, you cannot utilize 10,000. They disbursed loan entire 10,000, but 1,000 they kept as a compensating balance, so you can utilize 9,000, but you need to pay the interest on entire 10,000. So like 10,000 multiplied by 2.5%, it is basically 250, I guess, okay. So 250 is basically the interest, okay. So your interest rate is 250 divided by not 10,000, even though you paid on 10,000, it is on 9,000, okay. So your interest rate is slightly higher than 2.5%. This is basically the effective interest rate. Means you need to calculate interest on means whatever the interest you actually paid on whatever the amount you are able to utilize actually, okay. So we are going, whenever we do the practice session, so we are going to do some calculation here as well, okay. So here they gave an example, 10,000 promissory note has a stated rate of 10% per annum and is due in 1 year. The bank charges a loan origination fee $75 and the state in which the loan is made levies a 50 documentary charges. So actual amount utilized by the borrower is 9875, but he need to pay the interest of 1,000, okay. So interest rate is 1,000 divided by 9875, which is slightly higher than 10%, okay. So that is basically the effective interest rate. In a stated interest rate, whatever the amount you are utilize, whatever the amount disbursed by the bank, you need to calculate interest on that amount. But effective interest rate, whatever the amount utilized for a commercial purpose, okay, and whatever may be the interest actually paid, you need to calculate interest rate by considering these two amounts. Are you able to get it? Means what is the difference in stated interest rate and actual interest rate? I can give some scenario. Like 10,000 is a borrowed amount and the 10% is interest rate. So 1,000 is an interest, okay. So that is basically the stated, okay. Then we saw 9,000 after deducting compensating balance. Balance, okay. You need to pay 1,000. So interest rate is slightly higher than 10%, okay. So you need to calculate the interest 1,000 divided by 9,000, okay. The third is basically the there is no compensating balance, but there is a bank charges, which is 125. So 10,000 minus 125 is 9875. Bank charges 125, okay. So 1,000. So interest rate is again 1,000 divided by 9875, okay. There may be a question where these two both the condition are there. There is a 125 bank charges and there is a 1000 as a compensating balance. So what you need to do here, you need to consider the interest amount is 1000 as it is, but the in denominator you need to consider 8875, which is basically 10,000, means the both the thing minus 1000 compensating balance minus 125 bank charges, and then you need to calculate the interest. So this is basically the effective interest rate. Okay, so you will get the question either for compensating balance or for bank charges or for both the situation, compensating balance as well as the bank charges. Annual percentage rate. Okay, so interest represent non-compounded version of the effective interest rate. The annual percentage rate is the rate required for disclosure by the federal regulation. Okay, so annual percentage rate are computed as a effective periodic interest rate times the number of period in a year. Okay, so say for my quarterly interest rate, %2.5%. Okay, so what is my annual? Any guess? If
10%.
yeah, it is 10%, but why not it is more than 10%? Because the quarterly interest I am paying 2.5. Okay, so my 1000 is an amount, on that in every quarter I am getting 25. So for next quarter my principal is 1025. Okay, so this way it is more than 10% interest I am getting. Means more than 100, because first quarter I am getting on a 1000, second quarter I am getting on a 1025, in a third quarter I am getting on a 1050 or 60 slightly, because on 25 also I am getting some interest, and a fourth quarter it is 1100 maybe, or
Maybe the interest rate is fixed.
Interest rate is fixed. No. If you read the computation, so it is clearly given the non-compounded version. So that's why we need to simple multiply. Okay. So it is 10%. Means whenever you want to give a information on an annual percentage format, so whatever may be the quarterly amount that you need to multiply, whatever may be of a 6 monthly amount that you multiply with a 2, like this. Okay, even though actual interest earning is more than the 10%. Okay, now we need to see this example. A 10,000 promissory note display as a stated rate 8% with interest to be paid semi-annually, means after 6 months. The bank charges a 75% loan origination fee and documentary tax 50 assessed by the state. Calculate the annual percentage rate. Okay, so for first 6 months, okay, so it is basically like 400 is an interest. Okay, how 8% means 4%. Okay, 8% is stated. Okay, so 4% is for 6 months. Okay, and the amount is 10,000. Okay, 4% of 10,000 is 400. Okay, which we need to divide with 9875. This will give 4.05. So this is what the 6 monthly effective interest rate. Interest rate for 6 months. So we should not do any compounding, we just need to multiply it by 2, so it is now 8.10%. Okay, so we need to first calculate the effective interest rate and then we need to annualize it without giving an effect to the compounding. Okay, so this way we need to consider the effective rate if there is a quarterly, 6 monthly or annual, quarterly or 6 monthly generally. Okay, so any doubt here? Okay, so today we will stop here. So anyone want to discuss anything or any query till now?
Sir, as you said, the annual percentage rate won't be compounded. So won't it be the 8% itself? Why it's getting effective?
No, effective we are calculating for first 6 months. Okay, so stated rate and effective interest rate are two different things. Okay, so annualize, what I am doing, it is for calculating the effective annualized interest rate. It is not the stated interest rate.
So if the question says calculate the interest for one particular year, not half yearly, so what will be the annual interest rate? So it will
You
be
need to
8% itself, right?
no. You see, 8% is a stated one, that is given. So that no one is going to tell you to calculate because it is a given on the security itself. Okay, so what you need to calculate the effective interest rate for a year or for a 6 month or for a quarter. Sometimes you have an yearly information, sometimes you have a quarterly information. Okay, now in this situation what happened, we need to calculate the effective interest rate. Okay, but like you need to consider, I mean, if they gave the question is something different, if they already gave a 8, so you can calculate easily. You can calculate easily the annual effective interest rate, but instead of that, if they gave the 4% for 6 months, then you need to apply all these things. Here you will get the same answer, means 10,000 multiplied by 8%, that means 800, and then divide by 9875. So you will get the 8.10. Okay.
Okay, sir.
So that way you need to consider. Okay, any doubt? No. So can I close the class?
Yes, sir.
Yeah, okay. So thanks everyone. Bye. Tomorrow morning at 8 o'clock.
Yes, sir.
Yeah.
Good night.
Good night.